This is your LMAX exchange technical update for Friday, June 9th, 2017. Euro dollar. So despite this latest minor pullback in the euro, the overall outlook remains highly constructive, with the market expected to trade up towards the next key resistance level in the form of the August 2016 peak at 113.67. If we do see any setbacks over the coming sessions, they should be very well supported ahead of 11.10. That's the low that we saw back on the 30th of May, with only a break back below that level to take the immediate pressure off the top side. But again, overall, the overall pressure remains on the top side even if we broke down below 111.10, and that would only suggest a bit more of a correction, which could take us down into the 109 area, where a higher low would then be sought out in favor of a bullish resumption. But again, the key takeaway right now is that despite setbacks, even on a short-term basis, the pressure remains firmly on the top side, with the market expected to trade up towards next key resistance at 113.67. Sterling dollar. So cable is broken down quite significantly into Friday, with the market taking out critical previous resistance turn support at 127.75. This opens the door for a potential pullback now towards a congestion zone in the 125 area. But overall, even with this pullback, the outlook remains highly constructive on a more medium to longer term basis, with the market putting in a significant breakout back in April above 127.75 that suggests we soon could see an eventual push up towards 135, which is a measured move extension. So again, despite this pullback and despite the possibility for additional declines into the 125 area, there is risk that this setback will be very well supported in favor of a higher low and bullish resumption back above the 2017 high around the 130.50 area and towards 135 further up. Only back below 123.60, that's a low going back to the 10th of April, would delay this constructive outlook for sterling dollar. Dollar yen. So dollar yen remains under pressure since the market stalled out ahead of 115 several days back, with the market now just off that 2017 low ahead of 108. At this point, look for any rallies here to be very well capped ahead of 112, with a break back below the 2017 low just around the 108 area to expose deeper setbacks, potentially down towards the 105 handle. Only back above 114.37 would compromise the bearish outlook, but on a more short-term basis, if the market were to break back above 112.13, a high going back to the 24th of May, it would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to roll over after stalling out ahead of a critical psychological barrier at 110, and this suggests the market could be poised to gravitate back towards recent range lows just ahead of 106. At this point, it would take a break back above 110 to force a meaningful shift in the structure, and until then, the pressure overall remains on the downside. Aussie dollar. So Aussie has traded up over the past several sessions, with the market breaking back above the 75 handle, but overall this is a market that is expected to be very well capped into additional rallies, and while it holds below 76.11, there's risk for a lower top and continuation of declines, eventually back below the lows that we saw in early May, which come in around the 73.30 area, exposing 71.60 December 2016 lows further down. Again, only a close back above 76.11 would compromise the bearish outlook. Dollar CAD. So dollar CAD is highly constructive overall, and despite a round of setbacks over the past several days, the market is now deferred to a period of consolidation and could be looking for that next higher low, which would be confirmed on a break above the recent 2017 high at 137.94, opening the door for a measured move extension into the 142 area further up. At this point though, only a break back below 132.20 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has seen a very nice breakout over the past several sessions, with the market trading well off its recent 2017 low at 68.18. Having said that, this is a market that continues to be very well capped into rallies, and while it holds below 72.50 on a close basis, there's risk for another topside failure and bearish resumption back down towards a retest and break of that 2017 low. SPX 500. The S&P 500 is on pace for a move up towards a measured move extension at 2480 over the coming days. That would be to fresh record highs, following a move that we had seen a consolidation between 2400 at that previous record high that was established back in March, down to a corrective low of 2320. So that was an 80-point consolidation, and the breakout projects beyond 2400, 80 points, which takes us up to 2480. At this point, on a short-term basis, we need to see a break back below 2400 to take the immediate pressure off the top side, though structurally, in terms of a medium to longer term structure, it would take a break below 23.20 to force a shift in this bullish structure. Gold. So gold has seen some setbacks over the past few sessions, and although we could see these setbacks intensify over the coming sessions, while the market holds above 12.15, this overall outlook remains highly constructive, with dips expected to be very well supported in favor of a next higher low and bullish resumption above the recent 2017 high that was established earlier this week, just over 12.96, and towards a retest eventually of the 2016 peak at 13.75 further up. Again, only back below 12.15 would compromise the constructive outlook, with dips now expected to be very well supported, ideally ahead of the 12.30 area.